Singapore Airlines' recent first quarter results release have caused a huge uproar in the Singapore market, as this is the first time we've seen a Singapore stock fall 8% in a single day. The Singapore markets tend to be less volatile compared to its US counterpart. Therefore, it is indeed quite shocking to see a stock plunge 8% in one single day. So, what really happened inside SIA that caused the stock to fall 8% in one day and 10% to date as of close on 1st August 2025, a Friday? Hi there, and thank you for joining us for this episode of PhillipCapital's Market Watch. I'm Wong, a CFD dealer at PhillipCapital's CFD department. In today's episode, let me take you through the inside story of SIA's stock performance. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. SIA is Singapore's national airline carrier. SIA began following Singapore's separation from Malaysia and was initially called MSA, or Malaysia-Singapore Airlines. MSA eventually ceased operations in 1972, and both Singapore Airlines, now SIA, and Malaysia Airlines commenced operations as two separate entities. SIA has also long been celebrated for its excellence in aviation, earning accolades as one of the world's finest carriers. SIA itself has been ranked the top airlines in the world for many years straight by Skytrax, which is a prestigious UK-based consulting firm for air transport quality and standards. The company also made headlines when it distributed record-breaking bonuses of more than 7 months' pay to its staff, thanks to its stellar business performance from the post-COVID revenge travel boom. However, in its recent first quarter 2025-26 result announcement, the airline, despite achieving a modest increase in revenue, saw its net profit decline sharply by 59%. So what caused this steep decline? The drop was mainly due to lower interest income for the period, and more significantly, the underperformance of its partner, Air India, coupled with intensifying competition within the aviation industry. This financial setback carries significant implications not just for the airline itself, but also the broader tourism and travel industry in Southeast Asia and beyond. In its recent first quarter earnings release, SIA Group reported a total revenue of $4.79 billion, a slight rise from the previous year's $4.72 billion. Yet, its operating profit slipped by 13.8%. This steep drop in operating profit raises several concerns about the economic pressures faced by the aviation sector, which has seen a notable shift due to volatile market conditions and increasing competition. For tourists planning to travel across Southeast Asia, these changes are bound to affect the air travel and tourism landscape. As global tourism continues to rebound, airlines, particularly in Southeast Asia, play a vital role in making destinations accessible. The profitability of major airlines like SIA has direct consequences on travel pricing, flight availability, and the overall travel experience. A decline in airline profits could signal the possibility of reduced flight frequencies, higher fares, and reduced competition in certain sectors. SIA's recent passenger numbers, however, paint a more optimistic picture. The group carried a record 10.27 million passengers, marking a 6.9% increase from the previous year. The high demand for air travel reflects the resilience of the Southeast Asia tourism sector, where air travel remains booming. However, this growth comes at a cost. SIA's recent passenger yields, which represent the average fare paid per mile flown by each passenger, declined 2.9%. This decline reflects a more competitive environment where passengers may find tickets harder to secure, potentially deterring longer haul or more frequent travel. As mentioned earlier, another drag for SIA's profit performance is due to its partnership with Air India. Air India's full integration with Vistara, previously partially owned by SIA, and SIA's decision to account for Air India's financial performance on its balance sheet. Losses from Air India significantly hit SIA's bottom line this quarter. This means SIA's decline in profits was largely tied to Air India's poor performance. It may also affect flight schedules and passenger experiences, particularly for routes involving both airlines under their partnership. For tourists traveling between Southeast Asia and South Asia, this could mean fewer flight choices, possibly leading to higher costs or less direct routes, factors that might turn travelers away from the airlines. Meanwhile, Scoot, SIA's low-cost subsidiary budget airline, achieved record passenger numbers with a load factor of 91.5%, which measure the proportion of available seats illustrates that demand for air travel remains robust. Still, falling passenger yields paint a concerning picture for the tourism industry. Increased competition from other carriers could result in higher operational costs, which might eventually be passed on to customers, impacting travel demand. While the recent decline in SIA's profits raises concerns, SIA's commitment to passenger growth, sustainability, and expansion into new destinations in the Philippines and Austria offers a promising outlook. The robust demand for air travel, combined with SIA's strategic efforts to navigate economic uncertainties, suggests that the region's tourism industry remains resilient. Should travel demand continue to flourish, and as SIA works to manage challenges, particularly with its Air India partnership, I believe the airline as a group will emerge strong. Any future earnings surprises on the upside could push SIA's share price above the $7 range again. And thank you for tuning in to this episode of PhillipCapital's Market Watch. Do like and follow us on social media and subscribe to us on YouTube for more insights. See you in the next episode.